We're going to be kind about the market. Thanks, Sean. Enjoy it for sure, brother. And like I said, I hope it doesn't rain so you get to have a good round in there with Baron. That's pretty cool, man. Just before we get into it, I just want to say, like, obviously I've known Sean for a while. Like, Baron, I remember Baron when he was a little kid. Like, the idea of him holding a golf club, it's like, I don't need reminders that I'm old, but when I see, like, Gia playing hockey and I see Baron holding a golf club, it's like, and I see Baxter in university starting his own company. Oh, for the love of God, I'm old. But
time is accelerating as we go by.
But Brendan, days like today, before we get into this, we talked about traders and the floor and experiencing the markets. Days like today, if you get to witness a 10% down day on NVDA, a 22% down day on SMCI, 18 or whatever it was on ARM, we'll get into some other names individually, you get the equivalent of a week's worth of market experience watching the tape and watching level 2 and watching reads. You get like a week's worth of it in a single session.
It's different.
And sometimes even just one afternoon. So like days like today are special for traders. And I remember like you want to be glued to your seats. But yeah, we got a lot.
But like those are the days that typically something different ends up happening over the next coming days and weeks. So whether that was the turn or not at the top of the overall market will remains to be seen. We'll show you the weekly charts here coming up, but here's just a sector overview for everyone to wrap up the day. Like I said, we came on at 2 o'clock here this afternoon. I mean, without the banks today, this is a lot worse for the overall market. I mean, a lot of strength in the banking group at the end of the session. I mean, even retail names outside of Amazon, obviously. Some of the discretionary names positive on the day. But without this, like this move is a lot worse today in the market.
Well, this is what we sort of talk about when it comes to diversification and what that actually means and where you might hide or why, as you guys mentioned on the podcast, on an early dip buy that you might consider the Dow just a little bit better than an early dip buy in the Qs or the SPY, because there's a lot of things at least contained in the Dow that are going to be a little bit more defensive, right? So, it's interesting to see like Lilly was down, but like healthcare, some of the healthcare names did pretty well today, actually catching some bids in there. And you have to remember, it seems like forever ago, but the banks just reported. Like we just got all of them reporting to start earnings season, and their numbers were strong. So it's easy to forget this.
Context.
Last week and then early this week, the banks all reported strong. JP Morgan even gave you, and JP Morgan even pulled back. So on strong earnings, JP pulled back. So when everyone exits tech, where is money going to go? Oh, so you're going to tell me that we're rolling over in the chip names and JP Morgan just pulled back 10% after a good quarter? You hit a couple of buttons and money goes in one hand and then, out one hand and then into the other.
Across the aisle on your screen. We're going to have Adara jump on here with us in a couple of minutes, but I want to recap the overall markets real quick. Ramin, I did set up the topics if you want to push that button. That's an ugly chart. That's the SPY. There goes 500 on the SPY, and then some down to 495 is where we end the day. That's a weekly chart, remember? So pretty ugly few candles accelerating to the downside. Let's do 3 Qs, not 2. There's the NASDAQ, the Qs, big ugly red candle, 420 comes and goes on the way back down. This is key, as we were saying, heavy volume even into the close there to the downside for the NASDAQ. So do we get some continuation coming up next week? Remains to be seen. Heavy volume here on the DIA, the Diamonds ETF for the Dow, also to the downside. So that's kind of the lay of the land as far as what happened today. And then the overall week, 3 weeks in a row, red here. It's getting ugly.
Oh, it's definitely getting ugly. But as we said, like there are those kernels of strength. Like you showed a weekly chart there on the SPY. Well, I'll counter with a weekly on XLF. We talked about the financials being pretty good. And then if we could pull up the chart here, on bad earnings, right, at the end of the day, good earnings, I should say, you did have a pullback, and today it found a bid. And what I love, I always love to see this happen, technically speaking, when you find support where you want it, right? So 40 was a pretty big level when it broke out. And actually, it wasn't, I don't know if it was the last time I did the market recap show, but it was certainly around this time. I had Mike and Loss and I were both talking about this breakout XLF when it had a 38 break with a 37, which was previous resistance, and the move was to 40. Well, the dip on earnings was to 40 just now. And there's a name that you saw in there on the when you had the entire market board up that was strong, and it was Berkshire Hathaway. And remember, Apple's been getting crushed, and Berkshire was still having a strong day today.
Yeah.
So, you know, you always look for those kernel strength. I don't know if we're at dip buy spots yet technically on the SPY and the Qs, but you did hit one on the XLF, and then it did what you'd expect, which is make a bit of a bounce.
I want to get your thoughts on that coming up here. Sean and I were talking about this on the podcast going back a couple of weeks ago, but the way you approach what is to come, not only into the remainder of this year, but maybe even next, I think is going to be key. So let's touch on that before we head out for the weekend. But I just saw somebody posted this candle, this is a weekly chart again, of NVDA, is, what was it, 213 billion in market cap. Comes out of NVIDIA today, so that's not nothing. But yeah, as promised, you have the buttons over there, I think. Let's go to, I guess we just did the Bears win thing. Let's go to Miss Adara, there you go, was live for the first time this week.
Hi, guys.
And I have to, hey Adara, I have to give her props right out of the gate here because there's a very common occurrence that happens when somebody goes from TMS to live around here, and that is they throw everything they've done up until that point out the window, and they start doing just random nonsense because they get very, very nervous about being live, and I'm sure you can attest
Why are you sugarcoating it? I mentioned this to you, Adara, one of the mornings we were in early together.
Yeah.
I think it was the first day you went live. I said you have a small shutdown when you start. I was shut down 7 days in a row.
Exactly. No, but my point was
not down.
She showed no signs of nerves, no signs of any kind of difference whatsoever. So congratulations, week number 1. Tell us how it went.
Yeah, well, first of all, thank you guys for that. I think one thing too to keep in mind is I was in the sim for like 6 months, so I did have a little bit longer.
That's actually not long.
Really?
Just FYI.
Okay, I feel better about that now. Okay, that's good to know. But yeah, I think that the biggest thing for me that I noticed is I think just sticking with what works the best, right? So I think for me, knowing that I consider myself to be a range trader and a scalper, when I just kind of tried to stick with that was when I was the most comfortable. And then when I was trying to hold on to stuff for longer, that's where it got a little bit more, when it went more awry. And then I was kind of learn from that and try to tamp down those instincts. But I think the hardest thing is just trying not to trade the P&L, because it's hard when it's real. You kind of want to trade based on P&L a little bit more. But I'm just trying to, I guess, stick to what worked in the sim.
What I would say is I have one suggestion, only because a lot of trainees used to do this, and I know I did it myself, and maybe it's why I got shut down 7 days in a row when I first started out, because I did want to, and the simulator wasn't that good back then. So like the fills weren't as realistic, so there wasn't as much value in being in the sim for a long time. I think I was in the sim for 2 days in retrospect. So my first 7 shutdowns were like within my first 10 days of trading. That said, if you don't have your net up, I find that can be good, because what you want to do, I've seen you with a lot of really good ideas, and I'll look over and I'll say, that's a really, really good entry. And then maybe you'll scalp it out or you'll take it out, but it's like, that was like, I think you had an A+ there, but maybe if you're trading the net, you don't hold it as much. And I think a lot of us do this. We talked about FOMO today. But kudos to you for sticking to your guns. My one question to you would be, what's your biggest takeaway from this week? Whether it's something that worked, maybe it's a trade that didn't work, or something you didn't do enough of, or something you want to do more of. What is your biggest learning point this week?
That's a really good question. I think one of them, in terms of trades to just talk about, I think NVDL, so I was using that to trade NVIDIA. I think to me, I had this one level today that I was looking at. I think it was like maybe the equivalent of 807 or the 805 area on NVDA, but I know it was 3240 on NVDL. I had it lined up. I was taking shorts off this level. And the one time I took my eye off it, that was when it had that big break, and that's when NVIDIA broke below 800, right? So I think as someone who, I like to look at my little micro ranges and trade off of specific levels, if I want to do that, I have to keep my eye on those levels, right? So instead I was trying to scalp an IBIT short that just wasn't really as well conceived. So I think my biggest takeaway with using the example of that trade is if I like a level, if I consider myself to be a trader taking off of this level, I need to be keeping my eyes on that, because when you take your eyes off it, that's when it's going to hit.
Was there one thing maybe that you weren't expecting, between being in TMS or being in a simulator versus being live that kind of caught you off guard?
Yeah, I think one thing is this is a really good question. I think maybe the biggest difference is the type of stocks I was trading, because I usually traded a lot more of the Meg 7s, but I think maybe the difference was that I actually felt like I don't know how to put this. I think I did better in the live, and I think it was because I was taking it more seriously. Not that I wasn't taking the sim seriously, but I think because I knew I had less buying power and I knew I had a shutdown, I think I was a lot more diligent in my trades, and so I think that was why I actually think I had a better week this week in terms of just P&L and losses on the live than I have had in the sim in a really long time. So I think, oddly enough, I think it went. I'm trying to find a way to word this, but I think the biggest difference was just that I feel like, because I think I was really worried about it going badly, I think I tried to use that to have it go okay. So I don't know if that makes any sense, but I think maybe that's where I'm like talking in circles over here.
100%. No, okay. Perfect.
I got to point out one thing. As you mentioned on NVDA, that one particular level, I always say this takeaway is important when you're going over your trades. Whether you were there or not, sitting down, in Adara's defense, because she won't defend herself on this, you're very busy during the day. Most traders, they're going to be sitting at their desk the entire day, and they might not miss that level. You're doing a lot of things for us, and I think it's not an excuse, it's just the absolute truth. But you did identify literally there's a lot of good short entry levels, but it is literally the best short entry in terms of risk to reward and acceleration through that price. So whenever that happens, traders have a tendency to love to evaluate based on their P&L. And then if you had a good idea and you missed it for whatever reason, well, you don't have a P&L to reflect it. So you've got to make a note. When you journal, you're like, I had the right level. Okay, well, how would I have managed it when I got into it? It probably went faster than you would have expected. So when you're evaluating, just do not forget some of the things that maybe you missed a trade. If you keystroke error a trade and get out too early, still try to grade how you would have done on it, because all these mental reps, man, it's just, you can't get enough of them. And I love how passionate you are about the markets. And you're in here early, Brendan. Adara's the first person. I remember it used to be we used to be the first people in the door. Adara's the first person in this office on a daily basis.
We know you're on a bit of a time crunch, so we'll let you get going. But congratulations, first week live in the books. Get set, because next week is going to be wild. So strap in. But congratulations. Have a great weekend. We'll see you Monday.
Awesome. Thank you guys too.
All right. There's so much in the way of earnings we can touch on. Netflix maybe to start things off. But there's so much in the way of earnings to come next week. We want to give you a little bit of a tee up as to what to expect, because it's right out of the gate Monday and then Tuesday. I mean, Tesla. I got to be honest, I'm really scared about Tesla. It's going into the weekend here. It's not good. This is Netflix. If you missed it, first off, just to kick it off here, after the close yesterday, the initial reaction is higher. This was a trade way up here at 641. We come all the way back down and then some on the forecast, and they specifically alluded to their concerns about the consumer and spending and whether or not they can keep up this rate at which they are currently getting subscribers. And if you missed it again, it was the biggest net sub add number for Netflix since 2020 in a quarter. Yeah. That's huge, but today obviously pretty red.
Well, I mean, they're basically telling you that sub growth is going to head the other direction.
Yeah.
It's going to stop.
Yeah.
It's all well and good to say we're a more mature company. We want to be based on the other metrics and the more important metrics for mature companies, profits, all that other good stuff. You guys know what it is. However, the timing in which you do it is usually going to be something that's beneficial. You don't just decide to do that at any old moment. You're going to do it when you think it's the right time, when you've peaked on that number, and now it's not going to matter as much, or you don't want to have to show it. The good news for them is that the ad-supported tier has had good, the advertised revenue has a lot of room to grow. They got a lot of availability and chances to grow there. It's in the early stages. So long term, it's probably fine. But let's be real for a second. You look at a weekly chart of this, and you show me any growth company that has a chart looking like this for a couple of years, right? That goes into a big sea change like that, and that isn't going to pull back. And when you look back at this, 420, 430, 440, like that would be with the weekly trend if we were to pull back in. You could point out the 470 to 500 level is more reasonable, but if it went deeper than that on a weekly chart, that's the kind of thing that doesn't even scare long-term investors. They're profitable when everybody else in the space isn't. I think we're past the point that Netflix is going to drop from $630 to $200 and get cut by 60 to 70%. It just had to be perfect. You got a kink in the armor. I think long-term it looks like it's going to be fine. Personally, as a shareholder, when that weekly 200-period moving average comes in, I'm a buyer on the weekly. Whether it gets down there rapidly or slowly, it doesn't really matter to me. I think it's going to be fine when it comes to that the advertising tier, because the advertising dollars always go somewhere.
Yeah.
And linear TV's dead, and Netflix is figuring it out.
It's one of those things as well where there's so many options now. They have to make it good to compete. I was just double checking on there. Yeah, it's still trading 50 times, and that will be updated as of close. So their PE right now 50 for Netflix, which is obviously well off where
Still needs to come back.
Where it's been in the past as well. I mentioned this before, but I want to touch on the simple sense of, I made the decision going back to, I think it was a week ago or 2 weeks ago, and I mentioned this on the podcast. Given the conditions that we're in, given the uncertainty surrounding interest rates, given the uncertainty surrounding inflation going forward, the election in the U.S. coming up, yada, 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 global, macroeconomic concerns, I'm no longer going to buy stocks this year that are going down. And I even put it this way, and shout out to Michael Noss, I want to see happy faces on charts before I start, putting my money back to work. I'm no longer going to sit and try to stand in front of things that are just going down until there's a little more clarity and certainty in the way the world is. So Sharif and I were having a conversation about Tesla today because, Tesla's Tuesday, we have to remember.
Oh, goodness.
And that's going to be a little bit of a heart attack. I wanted to mention this real quick, and let's go through these real quick because there's so many of them. Here's Spotify. We'll get that Tuesday before the open. Here's another one, obviously, big, ugly red candle to the downside. So SPOT coming up. Again, Tuesday before the open. There's GM before the open. There's UPS before the open. There's GE before the open. Guys, next week is the week, but yeah, let's stop at Tesla and just think about this for a second because there it is down there, the 23rd after the close.
So personally, I have my approach of my personal account is I have things in buckets. The overall market, I have a core position in the overall market. When I have money that goes in, a portion of that goes into, and it's been the Qs lately, but it was the SPY before, and recently, actually, some of it went into the Dow. But it buys the index, and I don't care. I don't try to time it or anything like that. I'm just once a month I'm buying it.
Same.
You leave it in there. And then I have a bucket of these are the stocks that are like the core holdings of the quality that I like, right? Like my, that'll be like my Microsofts, my Googles, and my Apples, and my Caterpillar, my Procter, and there's those. Then there's the ones that I think are more like long-term bet kind of things, where I'm not putting a huge amount of money into it, but I like the upside of it.
Sure.
Intel was in that bucket. So I would argue that up until some point, I don't remember exactly when this was true of EVs, but at some point near the end of last year, Tesla for me became the other thing. It's not like one of those, I still own a bunch of shares of it and I'm not really selling anything because I already did some selling. So I'm like, okay, fine, I already did the selling I was going to do. But it's the kind of stock where, as you said, the overall trend, you can pull back, but the overall trend on most of the things that we own and feel secure about, they're really good on a weekly chart.
Yeah.
Tesla's is not.
It's not.
Tesla's is not on a weekly chart.
It's broken.
That is a broken chart.
Yeah.
And I've said this about Alibaba.
Yeah.
I am done with putting Alibaba in some kind of a value category as well. It is now a shot play. Then until it shows me strength, I'm not putting another dime in it.
Yeah.
And I put Tesla into that category. Now, obviously, when you say things like this, if they have a good quarter, shocks everybody with maybe margins improving, which would be probably surprising to everybody, good margin number and not a lot of disappointment that makes it look good, and it still tanks on that, maybe it gets to a level where I'm like, I just like the fundamental numbers enough, and it's down at like $120. It's not impossible, but it would take a lot for me not to wait for some kind of.
It's amazing that we're even having this conversation about 130, 125, 120 on Tesla.
What were the margins? 8% last time?
No, but it started the year at like $100 higher than where we are now. So yeah, Tuesday, guys, strap in because we're getting Tesla earnings. So what do the deliveries be like? What is the forecast on deliveries? Because that's what everyone's talking about right now, is that demand has shifted.
Yes.
I read another note today about Toyota putting even more resources to work on the hybrid side because that initial first adopter crowd has already moved to EV land, and now it's the people that are still on the fence and waiting that they have to convince to come over to
If you live in a southern
EV
state,
land.
and like, not that I do, but I've spent time in Texas. I have family in Florida. I go to Florida every single year. My father and brother lived in Florida for a few years. If I'm anywhere near a place where there's realistic possibility that you got to evacuate and power goes out and stuff, I would have a hybrid. I'm not getting a fully electric vehicle. And I know there's a lot of, and the people that are passionate about it, as you said, they've already done it.
Yeah.
And everybody else, it's like they're waiting. Now they're really waiting. They're waiting for solid state batteries. They're waiting for the prices to get reasonable. They're waiting for just energy security. All these different things is what they're waiting for. And the earliest example of that, I think, was when Ford and GM have started diverging from each other a bit. And I think not just that, but I mean Toyota as well.
Yeah.
And you start to see like the names that had the legacy in there and were still putting up numbers with their legacy started to do a little bit better. So I think the hybrids are going to be good for a while. Not that I'm.
I agree. I agree.
I don't know. You getting a hybrid?
I might. I don't know. We'll see.
I think I'm basically going to go. I'm going to stay with my my burners until I go fully electric. I don't know if I'll ever play the middle, to be honest with you.
All right. I mean, the list is very, very long. There's this one. This is Boeing. That's going to be notable. Wednesday before the open, this thing's absolutely destroyed the share, and rightfully so, on doors and whatnot falling off of airplanes, as has been much discussed. Let's just go right to Meta, because that's going to be so key. Wednesday after the close, we get Meta. We are down here aftermarket right now, so we're already, testing some of these gap levels on Meta.
Yeah, but you know what? Like, if you start looking, when you start covering these groups, the reason why Meta gets into the category that they do is because they print money, and when then you start to think about the fact that, okay, well, with Meta, are you really as worried about geopolitical in China? But not as much. I mean, I start to think of what are the things that I put it in the category of if I see it back at $400, there's just going to be a bid there.
Yeah.
If on the weekly chart, if I see the 50, there's going to be a bid there because Meta's into that bucket for me. But
the only concern right now, I think, is valuations, because the inflation and interest rate argument has been, blasted into 2025 at this point, it would appear. So that's the only thing.
But you can't wait till they start cutting. And the other thing is, when we start talking about geopolitical, and I understand, like, not to get into any of the actual issues that are going on, but historically speaking, big cap, quality tech with good cash flow is usually defensive when we have geopolitical issues.
Sure.
So typically speaking, when it's not just oil and defense names, the money usually goes into things like Meta, and and Apple would be in that category typically, but then they have consumer in China. Meta gets in there. So like I don't think that's really changed. I think the difference why that's not happening now is just how ridiculous the runs have been. I mean, Meta at the beginning of 2023, the beginning of last year, was $150 stock.
Crazy.
Right? And it's now $500.
It's crazy.
So don't be shocked if advertising numbers aren't what you think or what we're expecting, if Meta sees a 450 on it. Like, just don't be surprised at that. But at the same time, there'll be zero panic in me. I'll just be seeing some opportunities to get some money to work.
All right, Thursday then, the big day. Wow. Microsoft, Google, Intel, Snap, Roku. Western Digital has been on a tear as well. But the big one is going to be Thursday again. All of big tech essentially coming. Apple, we have to wait for another week. That's the one-off. But I mean, Google, much discussed, has had a great year as well. Microsoft basically sitting right now at this 400 level going into next week when we get earnings. So, so much to come. I don't want to stay here too long because it's Friday and everybody has things to do and places to go. And Ramin's had a long day, so we want to get her into the weekend. But PCE we get on Friday. That's going to be so key for the overall market. And this inflation story, I was saying to Sharif this morning, you know, if we get an uptick on PCE after back-to-back inflation readings that have also been, you know, moving higher, I think this conversation of the next move is up, not down, really starts to take hold. I
think that's, like at this point, there's enough people that are conceding you might not actually get a cut this year that you're 100% right. Yeah. Like that would be the thing that would actually move us and have us caring about what's next for the Fed would be something that scares them enough that they would need to raise.
And that's just not coming.
I'm still of the mind that I don't see anything that's that bad that they would raise. I can see them keeping rates where they are. I would be shocked if they actually
if we see a 4 handle on CPI.
It's an election year though. And I know they're not supposed to be political about it, but it's an election year.
But their mandate is inflation.
I know that's true, but I don't trust
employment.
any of that stuff, man. It's an election year. Are they going to raise rates?
My simple point is, where's the line?
Yeah, that's a good point.
At some point, he has to say, this is going too far, and we have to step in and do something. So.
And I like you, Jerome. I'm just saying. I don't think he has the stones to raise rates in an election.
We shall see. Happy Friday, all. Hey, we didn't push the week ahead, whatever. We talked about the week ahead in...
Well, that's my bad.
Throughout the entire show. Have a wonderful weekend, all. Join us next week. It's going to be, again, the biggest of the big earnings week. We get GDP, a preliminary look. We get PCE, as we said, ahead of the Fed. So happy weekend.
Cheers.